NSE, as you said, edged up today. There's some exciting news coming in. Equity Bank profit before tax is up. Housing finance, we're expecting that tomorrow. But joining us in the studio now to take us through exactly what this means for the NSE is Henry Chege, Head of Fixed Income at ABC Capital. Thanks for joining us.
Oh, thank you.
Let's begin by looking at Equity Bank.
Yes.
The results were up to close at, that's 46% for the first half of 2010. Quite exciting.
Yes.
Some of the analysts we spoke with, as we've seen on TV earlier, expected the bank to post somewhere around 16%. Do you share in that? And how do you see this particular stock reacting for the rest of this year?
Well, right on the information, we've seen the stock reacting positively to the information. I mean, the stock trade up 50 cents up. Today it closed up at 24. We saw a high of 24.50. Well, just borrowing from what they released, we've seen that with the resurgence of the economy and with the equities focus on the low-income market and the mass market, we've been able to see that they have been able to grow their loan book quite significantly. That has also resulted to quite a considerable growth in their total assets. So going by what the industry was expecting, I believe Equity Bank has set the standard for the banking sector. But going further down, we do expect that other banks coming along are going to release a double-digit growth for this particular half.
Now, of course, as you have mentioned, Equity is one of the top banks going by their first quarter and the second and the first half results, as we've seen. But what does this mean for the investor? What do you think investors will be looking at, specifically looking at the banking sector and equity towards the end of the year, since you know, some analysts say equity usually performs better for the second half?
For the second half. Well, investors are keen on definitely return on equity. I mean, on the money they're putting on the counter. So what will deliver that return on equity is going to be, one, their control on expenditure, and which we've seen by a reduction in their cost, with their operating costs, that they're able to operate efficiently with at least some sort of a strategy that is based on controlling those costs. Then two, I mean, with the focus on the East Africa community right now and what's happening in the general economy, most investors are pegging on that. That's why you are seeing that people are coming in at these levels of 22, 23. People took positions quite early, and with most analysts pegging the share to have at least a valuation of around 28 shillings, there's still some headroom of around 4 bob to materialize in the market.
All right, Kenya Revenue Authority also released their results today. Seems the taxman is finally getting you know, what he wanted to get out of this particular market, tightening some of the loose ends. Performance up at least at 98%, which is quite impressive. What do you think of that?
Well, it's quite impressive, as you've reckoned, because considering the fact that we came in from a subdued economic environment, and to looking at where we are heading to with the rejuvenated growth, with the rains, I mean, each and every macro indicator indicates that the economy is headed for at least some growth factor of around, say, 4%. So keeping that in mind, we do expect that with increased economic activity, definitely KRA is going to meet, to see more and more avenues to tax the Kenyan or with the business. So going forward, I mean, they're going to sustain this growth. I mean, if the 4% growth is going to sustain over, say, this financial year and the next financial year, then KRA is definitely going to be reporting significant growth going forward.
And of course, the finance minister will be looking at KRA as one of his, you know, the ways to raise money as we go into this particular financial year. Let's look at housing finance, also releasing the results tomorrow. What are your expectations? Well,
housing finance, one, I'm looking at housing finance from the housing market. I mean, there's been a lot of readjustments and repositioning in the housing sector. I mean, with just what KCB did with SNL, reintegrating it within the banking system so that they can sell the housing products as a one-stop shop. For housing finance, this is the area. So for sure, going by what they released in the first quarter of this year, my expectation is they're going to register at least a double-digit growth, probably the tune of 15–20% growth. And this particularly on the back of a resurgence in the economy. Two, factoring in what the finance minister said about the lending on the core capital being increased to 40%, what they can actually lend based on the core capital, then this gives them additional funds to give out to clients in terms of mortgage products. So going forward, that particular counter is going to, HFCK is going to be resurgent. I mean, it's going to be where it's supposed to be in the market, because we've seen it recover from lows of 15 shillings. Right now it's trading at around 22 bob, which is quite encouraging for the counter.
What's your analysis though? You know, when James Mwangi, the CEO of Equity Bank, was releasing his first quarter results, word was very heavy that Equity Bank was keenly eyeing housing finance, that nobody really came out strongly to say. But with that in mind, as they release tomorrow, do you think Equity Bank will be keenly watching? Yeah,
sure. I mean, they are big. They are one of the biggest shareholders. I think with a 24% stake in the company. Well, for Equity to really focus on the housing bit, I mean, looking at HFCK, sure, from an investor's perspective, they're keen on a return on their money. But going forward, in terms of the talk that has been there, in terms of them being keen on HFCK, in terms of the talks that has been there in a merger and real acquisition, my opinion is I don't think it's quite healthy for the market, because I mean, if you look at HFCK, I mean, people need that avenues to invest in, and if you have one bank that is really say dominating the whole financial sector, well, I do believe, well, it's open to talk, but I do believe, my opinion is Equity will get their return, but going forward in terms of a merger with HFCK, then that one is it's a bit of a question mark for me.
All right, Henry, we will definitely be keeping our eye out for that. Henry Chege, Head of Fund Management at ABC Capital.